5 tips for the next Bitcoin bull market. Educate yourself. Regardless of what you invest in, gaining sound knowledge of its underlying merits is step number 1 in any investor's playbook. You absolutely must know what you invest in, and the same goes for Bitcoin, or any altcoin, for that matter. Familiarize yourself with Bitcoin's fundamentals, such as its total limited supply, utility, and adoption rates. You can also analyze historical price patterns, market cycles, and factors that tend to influence Bitcoin's price. This knowledge will definitely help you make more informed decisions. A great place to start learning more about the BTC fundamentals is our section called Bitcoin for Beginners. It contains a lot of helpful information, such as who created Bitcoin, who is eligible to create an account, how to store Bitcoin, is it safe, and much more. Research and analyze. Once you have the fundamentals down, it's important to stay informed about both Bitcoin and the broader cryptocurrency market. Think about it this way: if you're investing in land, you will undoubtedly analyze the factors that could impact it. These include the condition of the land, what you can grow on it, but also who your neighbors are, the general area where it's located, and so forth. The same goes for investing in Bitcoin. You should stay informed about what's going on in the market. You can read books, follow reputable news sources, join online communities, and in general, do a ton of other things that will help you learn about the technology. In turn, this will help you anticipate market trends and potential catalysts, which can maximize the return on your investment in Bitcoin. Define your investment goals. What are your plans for the money invested in Bitcoin? When do you want to cash out? Can you afford to lose it? Determining your investment objectives is paramount because it will also impact other important decisions, such as how much risk you're willing to tolerate and the time horizon. Despite being the largest and, supposedly, most secure cryptocurrency, it's still considered very risky relative to investments in traditional finance. Please refer to the charts above. The BTC price went on to gain 300% and then lost 50% of it in a matter of less than 6 months. This tumultuous performance can be hard to stomach, so being aware of it in advance and being able to tolerate it is something you should consider. Develop an investment strategy. Once you have the above all clear, you should be more or less ready to develop an overall investment strategy. There are multiple ways to invest in Bitcoin. One of the more popular strategies is the so-called dollar cost average (DCA). We have a dedicated guide and a video explainer of DCA that you can find here. In general, though, it represents a way to buy Bitcoin in similar increments over a similar period of time. For example, you can buy $100 in BTC every month. The benefits of it are that over a long enough time period, you get the best average price. There are also other strategies to invest in Bitcoin. For instance, the so-called value averaging suggests adjusting your investment amounts based on market performance. E.g., you can buy more Bitcoin when there's a bigger dip. In all cases, you must set guidelines for when to buy, hold, or sell BTC based on your own risk appetite and analysis. Set a budget. Now that you know how you will invest in Bitcoin, the next step is to set your budget. How much do you want to spend? This is incredibly personal and depends entirely on your current and projected financial situation. Setting up a budget and sticking to it will help you better track your investment and also manage your risk tolerance. The most important takeaway here, however, that is specific to investing in Bitcoin for the next bull market is to understand that BTC is a risky purchase. That said, you should never invest more than what you can afford to lose without significantly impacting your overall financial stability.